Here's the truth. When you're first starting out as a freelancer, it's pretty common to lose money, and it's your job to make sure you use those losses to save on your taxes. What is up, everybody, and welcome back to the Keeper YouTube channel. My name is Tyra, and I am here to teach you everything you need to know about 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. Today, we are diving into the world of business losses. What are they, and how can I use them to save on my taxes? So let's get right into it. What is a business loss? So what exactly is a business loss? Let's say you're bringing in some money as a ship shopper, shopping for and delivering groceries to customers. But then you add everything up you spend on shipped, your gas, your car repairs, phone bill, hot and cold bags, etc. And you find out that your expenses are actually more than your income. That, my friends, is a business loss. And the thing is, losing money on the business is actually pretty common, especially when you're first starting out. These business losses can affect your taxes. So if you lose money on your small business or freelance work, the IRS lets you use that loss to lower your taxable income. So if you're working on the side of a 9-to-5, you can actually use losses on your side hustle to lower the tax you pay from your day job. So let me give you a quick example. Let's say you end up losing $1,000 doing shipped. Now, let's pretend you're doing shipped on the side of an office job that pays you $40,000. You can use shipped loss to lower your taxable income from your office job. So you only get taxed on $39,000. But I do want to point out that there are limits to how much business loss you can claim on your taxes, and that's usually around $260,000 if you're single or $520,000 if you're married and filing jointly. So check the description box below for the most up-to-date limits at the time of this video, since they can change from year to year. Do you get a tax refund if your business loses money? Now, you may be asking the question, do you get a tax refund if your business loses money? And the simple answer is you can, but only if you have other income, like from a W-2 job. If you lose money from your business, the IRS won't give you a refund of the amount that you lost. Why is that, Tyra? The rule is you can't use your business losses to bring your total income under zero. Zero is the lowest you can go. That's across all of your freelance and W-2 jobs. So let's pretend you lost $50,000 on a business and also made $45,000 in a 9-to-5 job. You can claim up to $45,000 in business losses, so you get taxed on $0. But you can't subtract $50,000 from $45,000, get negative $5,000, and force the IRS to pay you $5,000 as a refund. It just don't work like that. Now, what if you lose $50,000 on your business and don't have enough W-2 income that year to cover it? Don't worry, you won't lose out on that $50,000 forever. You can save it and write it off in a future year, which is called carrying the loss forward. And the beauty of this is there is no limit to how many years you can carry a loss forward. But there is, however, a limit to the amount you can carry forward. That's 80% of your total income in the year you're trying to claim the loss. So let's take the same $50,000 loss. Let's say we wanted to carry it forward. Your total income from this year is $40,000. You're allowed to carry forward 80% of that number's worth of loss, which is $32,000. That means your taxable income is $40,000 minus $32,000, which is $8,000. You started with $50,000 in business losses, so there's $18,000 that you didn't get to write off this year. You can actually hang on to that again and carry it forward the next year. Just make sure you keep a good record, and that is what the Keeper app is for. It can help you track all of your business expenses from year to year. So if you're interested in getting started with the app, we have included the link down below in the description box. Now, what happens if you lose money too many years in a row? Well, if this happens in too many consecutive years, the IRS can decide that your business is actually a hobby. Ouch. Yes, y'all, they can actually decide for you that it is in fact a hobby, which means they'll still tax you on what you've made, but you cannot claim any write-offs moving forward. So to stay on the safe side, we recommend you use the 2 out of 5 rule. That simply means you try to only lose money 2 years out of every 5 years. And with that being said, there is a lot of wiggle room for new businesses. So if you're just starting out, you can definitely lose money several years in a row without losing all of your write-offs. But Tyra, am I in danger of my business being classified as a hobby? How can I prevent it? Okay. Cool your jets, I got you. To help prevent your business from being classified as a hobby, you just have to prove you're in it to make money. That means being able to show them a written business plan and all the ways you're actively trying to make money in your business. You can also show ways you are modifying the business to cope with the losses you are enduring. So if you think you're in the danger zone, make sure you can prove you're actually in it to make money so you can keep your business from being categorized as a hobby. Now, I hope you guys feel a bit more confident in claiming business losses, and that's all I have for you guys today. In the comments below, let me know if you have any questions about anything I mentioned in today's video or business losses as a whole. And if you would like more easy to digest tax content, make sure you give this video a like, and if you have not already, make sure you hit that subscribe button down below and make sure your notifications are on so you can get all of the alerts and stay up to date with all things self-employed taxes. Thank y'all so much for watching, and I'll see you in the next one.